Okay, welcome everybody. Today we have a special presentation by my favorite loan agent, Jody Hatano with Golden One Credit Union. And actually, being a loan agent is like being a skilled craftsperson, right? Somebody like an accomplished carpenter or something like that. And what I mean by that is, in addition to having the knowledge, you also have to have the right tools. Right. And the right tools, of course, in the loan business are the loans and products. And so Jody's going to talk about that. She's a skilled craftsperson when it comes to doing loans, and my go-to source for any loans that I have with my clients. And so with that, I'm going to turn it over to Jody. All right.
Thank you, Mike. Thank you, guys. I'm seeing some familiar names on here that I've either worked with in the past or just recently met, like Ivan, Monica. I can't see everybody's name, but anyway, thank you so much for taking time out of your day to watch this little presentation. I really want us to have more of a conversation. I'm going to talk about some stuff, and then I want you guys to feel free to, send Mike a message if you want to ask a question. We can do Q&A at the end, during it, whatever you guys want. But what I want to talk about today is just a little bit of market update, just kind of where we are this summer so far, and some strategies. Obviously, the whole goal of what we do is to, be the advocate of people buying a home. You as the agent, you're the advocate, to look at their best interest between them and a seller. I'm the advocate to get them the right loan at the right price, with whatever challenges they may have. And I'm between, the underwriter. So that's an exciting thing for me. And I want to be able to tap into some markets that I don't think are really that people really think much about anymore. It kind of goes back to, marketing 10, 15 years ago. But we're in a different world now. Everybody knows that. Social media is where it's at. Admittedly, I don't utilize the platforms at all. But I want to start doing that. Okay. So if you don't utilize social media at all and you want to, then you and I are going to be really great partners together, because we're going to kind of fish through everything, find out what works, find out what doesn't work. And, over time, I think this would be, pretty successful. We do have a lot of great loan programs out there that, to my knowledge, no other lender has. If you've been on any of my calls before, you've heard me talk about the 80-10-10, and I'll tell you, it's my favorite thing in the world here at Golden One, among a lot of things that I love about being here. But it's really a great strategy, especially in our world where we're having, offers over asking price. You're having to go up another 10,000, 20,000 to just get that offer accepted above, the 15 other people that have bid. And that could pose an issue with the buyer being a little short on cash. So we've got a couple of options that we can help them out in that regard to help them, win the bid. Okay, but I'll get into that in a little bit. So let me start sharing my screen here. Let's see.
This may not be as important once you're sharing the screen, but there are times when your bright lights, your face is kind of washed out. Right now you look great, but there are times when it's all, I'm just saying.
Okay, maybe, could it be the background?
No, it's like a light comes and goes. But anyhow, go ahead and just share your screen.
Close this.
Yeah, that might.
Better?
There we go.
Okay,
right,
cool. All right, so let's see. We will start this.
Yay!
Slideshow. Okay. All right. So let me move my slideshow over to the right screen here. Sorry. Otherwise, I'll be looking sideways, and it kind of looks weird. 1 second. Sorry about that.
That's right. We're still, even after all this time, working out Zoom. I was having problems yesterday.
Well, we practiced earlier, and most of our challenges we were able to overcome. I just forgot that I was on a split screen, so here we go. Okie doke. 1 second.
Back. Share the screen.
Yep, sharing the screen now. Share screen. Okay. Here we go. All right. Can you see that?
Yes.
All right, cool. Okay, so I'm just gonna have to look over here. So I can email this out to you guys later, so just don't feel like you have to write a bunch of stuff down right now. So, housing market update. MBA is Mortgage Banker Association. Our purchase applications actually fell about 2% last week, about 18% lower year over year. So that means it's 18% lower right now than it was this time last year. What we're seeing is a rise of cash buyers, and I'm sure you guys have seen it too. And cash is king, and sellers love that. And I've seen a lot of people lose bids because the seller accepted a cash offer, even if it's a lot less than what the buyer offered that has a mortgage. I had one that they lost the bid, and it was $40,000 less than their offer, and only one more week before closing. So we were at 21-day close. That particular cash buyer said they'd close in 15. So 1 week, $40,000 to me, I can't imagine why you would take that, but that's what we're seeing. Last year, cash buyers made up about 16% of total purchases. Now they're at 23%. So we are, obviously that's an uptick. My thought is that you've got people coming from other countries even that their money's not really working for them in that particular country where they live. So they see us over here with home valuations going up year over year, and this is a great place to invest. So it makes sense why they're we're seeing a lot of cash buyers, but we still want to be able to be competitive against that. Home prices have gone up significantly year over year. We're up about 16%. At the same time, inventory is low. So you listing agents, I'll do another call about how to be more successful with listing appointments, and I've got some ideas about how to market to sellers, but let's get on the ball and get some more houses signed up. Let's see, sorry. Okay. New home sales. Okay, this is going to be new builds. The new home sales were down about 6.5% in June, which is a huge miss because the expectation was that it would be 3.4% gain. So that kind of sent the market into a little bit of a turmoil there for a moment earlier this week. We've recovered as of today. Inventory levels, there's only 353,000 new homes for sale. That's up 7% from May. So that's good. But 77% of those sales, the homes haven't even broken ground or they're still under construction. 90% actually at the end of June were not even started or still under construction. So there's a backlog for builders. I know there's a shortage of lumber and all sorts of other supplies that they need. There's a shortage of workers that they can't, they don't even have the staff enough to do the build. So they're pulling back on some of their inventory so that they can, let the market recover a little bit. So if you work in new home buildings at all, then, let's talk about maybe some strategies there to, not that we can go in and build a house, but at least we can try to help buyers be more successful with closing. If they're doing a purchase with a house that hasn't even been built, then there's plenty of time to work through any potential challenges that they may have. I talked about this in my last call about the online fintech companies, Zillow, of course, Redfin. There's so many out there now. I think I see a new one every couple of days popping up. Right. Basically, see, my thought is, and you guys can share with me your thought as well, is tech is trying to push the real estate transactions to be online and almost, make you and I not necessary. And we are necessary and we always will be. I believe that. But we've got to counteract what they're pushing. So how do we do that? We offer some things of value, right? We go back to kind of the roots of why we do what we do. And we become advisors.
I really appreciate it.
Real advisors, not just, hey, I want to sell this house and make a bunch of money and move on. you want to maintain relationships with your sellers and your buyers through the whole time they're in the property you just
Today
sold.
I am, yes.
Because then they'll probably buy another house, right? So you want to be the one that comes top of mind. So let's say, you sell a house 5 years from now, you drive by and you see it on the market listed with somebody else, and you're like, I saw that. Why didn't they call me? Well, probably you haven't talked to them in 5 years, So let's talk about some ways to stay in front of people that you've closed.
Sounds good.
Not every week or anything like that, because that'll
appreciate
drive
it.
them
I
away.
really do.
But there are things that we can do throughout the years that to keep your name top of mind for them to give a call. I'm going to talk about co-branding marketing materials here in just a second.
Sounds great.
But I want to talk about the real estate or the rental market. Okay, so the moratorium has been lifted, I believe, on evictions, unfortunately. So I don't know what's really going to happen if we're going to see an influx of renters that have nowhere to go, potentially owing a lot of money to the apartment complexes or the landlords, where they're getting evicted. That's awful. And I hate that. So I don't know if Congress is going to do anything about it, but hopefully they will. So, but what I was thinking is, the rental market, Zillow reported in their June index, it rose 1.8%. Rent rose 1.8% in June, and already 7%, over 7% year over year. So the index is up 5.1% from March even. So you can see March, April, May, June, it rose quite a bit. And now it's on the fastest pace in the history of the data that's been collected. So I want to talk about targeting renters right now. And some of you that have been in the business for a long time probably have done this, but I don't see it happening a lot. Now, I know with COVID, you couldn't do anything in person, and we actually were going to do this in person, but because of the new variant coming out, we felt like it was not safe to do that. So we're doing Zoom, but that's okay. I think with what I'm going to talk with you guys about, I think that doing Zoom calls is probably a great option if we cannot do in-person meetings. But of course, the goal would be eventually, let's do a seminar, 50 people, 100 people show up, and odds are, if you can get 5% return on that, then you're going to be doing really well. So a little bit of thing about Golden One is we don't always require verification of rent. That's different from the banks, the big banks. As if you know me at all, I come from Chase and Bank of America, and that was huge. You had verification of rent. You had to get that every single time. Sometimes it's hard to get, especially if it's an individual that's renting, the house out to you, and then they're like, I don't care, I don't want you to leave, and it's, irritating me, so I'm not even going to fill this out. I've had that happen before, but we don't even do that. So we don't do verification of rent, so that can speed up the process. What I'd like to start doing is doing some home buyer seminars that are targeting apartment complexes. In the Bay Area, there's so much tech here, and there are a lot of renters with a lot of money saved, especially now that, the stock market's over 32,000, that their 401ks are, they've got a lot more in there now than they did this time last year. If any of them have, purchased Bitcoin before it dropped again, there's just a lot of potential out there, I believe. I don't look at renters like, oh, you have to rent because you can't buy. Sometimes people rent because they're too afraid to buy, or they think they can't buy. I have a client right now, I've been working with him since 2017, and he's been renting a house since 2017, and I've seen his financials, over $2 million in assets. And I'm like, why are you renting? You should be buying. But he's like, well, I didn't think I could. I don't know. I don't get that thought process. But anyway, now we've been talking about it more, and he's about to make an offer, thankfully. So sometimes I think it's that. It's just a matter of getting the education out there. There's a lot of stuff online. People can Google home buying process, and I've read through some things that have been written, and some of it sounds absolutely insane. I've read articles that talk really bad about loan officers, and how much money we make, and meanwhile their numbers are not even correct. Oh, you don't need a real estate agent. You're selling your house. Oh, sell it on your own. Save a bunch of money, or sell it here and pay a flat fee of $500. All that kind of stuff. So, I'd like to get out there ahead of that if we can, and provide some education of what it's really like, at the local level. Local real estate agent, local loan officer. We're not sitting in a call center in Texas. We understand the market here. For me, I understand RSU income. That's the big deal here. Most people don't, that are not in the Bay Area at all, or in California or around tech. So, so that's kind of why I'm thinking of going down this road with renters. The home buying, okay, I already said that. Co-branded marketing material. So I'm gonna, in the next few slides, gonna show you some of the marketing material that I can provide for you. Do some mail outs. Mike is going to also mention physical mail outs, flyers here in just a moment. Putting up flyers at local coffee shops, parks, libraries, etc. I know that might sound a little old school, but why not? It's not going to hurt if even one person pulls the tab or takes a picture of it and is like, hey, I'm going to go to that, or I'm going to log into that. It sounds really interesting and cool. I'm also in the process with my marketing team working on my own YouTube channel. What I would like to do is, let's say, well, that's Sandra Sample. I'm not, Sandra, are you? Okay. Let's say Sandra and I want to do a home buying seminar, and we put a flyer up at Starbucks down the street from a huge apartment complex. I would like to have it reference the YouTube channel that Sandra and I will provide together, sitting physically together if we can, a short 1 to 2 minute video that says, hey, thanks for picking up the flyer. We look forward to seeing you, blah, blah, blah. We're just going to talk about, XYZ, answer any questions you have. I've been in the business for 17 years. Sandra's been in the business for, however long she has been. And we're local, blah, blah, blah. Just something to put a personal touch to a flyer. People can take flyers and I'll take them down and then they end up in the trash somewhere. But if we can have, someone pop on over to YouTube and just at least see our faces and meet us, then I think that there's a better chance of retention. Social media, working on, I've got Twitter and all of that stuff, but I think I've probably had 2 tweets in my life. So I'm going to start doing that, and I would love to find out any of you guys that use Twitter. I'd love to tag you in some posts, homebuyer seminars, or really anything that you've got going on marketing wise. I'm happy to, tweet out as well. LinkedIn, I don't know, again, social media has not been my method of advertising, but getting into it, I've been talking with some people in executive levels, and they're telling me that LinkedIn is really a great tool. It's not just for, networking for a potential new job, but also if you're, giving things of value, information and things like that out to people in your sphere of influence, then you're bound to get a referral, at least 1 or 2 or maybe more, because they say, oh, Ivan Jew, I watch his videos on YouTube. He posts, every couple of weeks. Really sounds like he knows what he's talking about. My cousin's buying a house. I'll give him a call, see if he's, able to work with my cousin. I'm just kind of saying scenarios that might occur. But hey, you don't know if you don't try, right? And we've got to do something to set ourselves apart from all of these online companies. And I think that being a little bit more present in the community, in the area that you farm, I think that is going to be key. I don't see flyers for home buyer seminars at the Starbucks I go to. Every time I see the board, I think, oh, I should put something up there. And I haven't done it, but I'm going to. So if any of you guys are interested in what I'm talking about here, of course, send me a message or an email, and we can kind of dive deeper into it. Next slide here, Mike, you want to talk about what we talked about earlier about mailing out, how we can do that? I've just screenshotted a couple of the things here for you to reference.
Sure. Oh, all of this. Sure. So, by the way, in addition to apartments, there's also people that are non-occupant owners of houses, which means they're not owners necessarily, but they're non-owner occupants. That's the way to say it. And a title company can give you a list of people where we don't know that they're renting, but that's probably what's going on because the owner doesn't live in the property. And apartments, if you can find high-end apartment complexes where the rent is sufficiently high that people could perhaps afford a mortgage payment. And one of the things many people don't realize is they get a tax deduction, and that can affect their take-home income once they buy, so they actually can afford more than what their current rent could buy. And in fact, one of the marketing pieces I've had success with was, let me know if you would like to find out how much house your current rent could buy. Right. So, like you've heard me talk about this before, if you're going to market to somebody, you have to have a target. And the target could be people that are renting. It also, by the way, could be condominiums, owners that might want to move up. That's kind of a different thing. But they could be high-end apartments, and they could be people that are renting homes. In the food chain, that's the next level. Now, the first screenshot is something called Every Door Direct Mail, which is a way of sending postcards to a carrier route for very inexpensive postage. It's about 19.5 cents for the postage. The thing can be oversized. And I've seen agents that are doing this, and they're sometimes co-marketing with somebody else. There could be a loan agent ad, but I was doing marketing like this in a geographic area in Blossom Valley, and I was looking for just about anybody that wanted to co-market with me. For example, a chiropractor, a pizza shop, a tire store, any of the people, let's say, around, all the businesses that are around where the high-end apartment building is might be interested in marketing with you. And so if you have two sides to a postcard, you can sell some other parts of it, right? You understand, if you want to cut down. But this is an inexpensive way. Also on the right, and the way you would find something like what I found, which is targeted apartment dwellers by specific apartment complex. It's an online service. Right? It costs a fee. They'll actually do the marketing for you, but it's relatively easy to find by asking Google, how do I get a list of people that own apartments? There you go. Right. There you go. And somebody asked if this is going to be recorded. The answer is yes. The other thing that I would suggest that you do is, let's say you work, because you have another job in high tech, your spouse works in high tech, you have friends that work in high tech. A lot of the tech companies will allow, if somebody that works there makes the invitation, a real estate agent, a loan agent, and maybe even a guest speaker to show up and do a home buying seminar as a lunch and learn, right? You bring, sandwiches and bottles of water, and they put it on the agenda, but anyhow, the schedule for the company, and people will show up, right? Because it's right there. They don't have to go anywhere. So that if you're interested, you may be getting the idea that there are a lot of ideas. So if you're interested in actually pursuing this, reach out to Jody, reach out to me, and we can talk about ways of doing this together and marketing it. Was that good
Thanks,
enough?
Mike.
All right.
Yeah, and I run into a lot of executives at these big tech companies as well. I had recent closed a purchase for an executive at Netflix, kind of higher up on the food chain there. And he asked me, I didn't even ask him, but he asked me if I had anything that he could put on the message board for people on his team. I think he had like maybe 150 or so people on his team. And I'm like, yes, of course. Are you kidding? That's awesome. What if I did a co-branded material, like let's say that was your borrower or buyer that you sent me, then, and he's asking me for that, then of course we're going to co-brand. So that is stuff that it really does happen. People do are able.
And just a comment about, I found that when I reach out to tech companies and I tell them that we specialize in loans and tech home buyers, Now, of course, if Jody, if you were going to talk to people in tech companies about what's different, well, there's obviously RSUs, right? There may be foreign money, right, coming over. I mean, that's an easy list. And when you tell the tech company that we're willing to tailor the presentation to the particular needs of people in the tech industry to buy a house, you get a much better response than just saying, we want to do a home buying seminar.
That's great. And I will just, on a side note there, say something about RSU income. We just changed our guidelines. We used to take the 52-week low stock price and then average their RSUs over that they've received over 36 months. That was really conservative, and I didn't love that. Nobody loved that. So we kind of complained about it for quite a while, and we have just changed our RSU calculation guideline to the average of the high and low for the 52 weeks over 24-month period. I had one in particular that went from 15,000 in RSU income per month to 30,000 in RSU income per month. So he's now able to buy the house that he wanted to buy. Previously, a month and a half ago, it wouldn't have happened. So if you have anybody, I'm just saying, thinking in the back of my mind, if you've got anybody that has RSU income and maybe they're like, well, I don't know if I can qualify. It's real quick for me to do RSU income calculation. I've done it a trillion times. So just let me know the information. I can talk to the borrower. If you have someone that maybe wasn't able to buy a house 6 months ago, didn't have the income, but you know that they have RSU, let's revisit it. So, let's see if we can make it work now, because depending on the stock, we could almost double what we were calculating before. Okay.
All right. So, just to clarify, I knew the question one person asked, two people have asked, many people are asking, but not allowed. What is RSU? That's a universe? That's the road? Not it's a universe. It's a college, right? RSU. I saw them in the finals of the lacrosse tournament. Is that right?
No, not at all. Not even close.
Oh.
RSUs are restricted stock units. And most people in tech, even an entry-level engineer, get some form of RSUs. So let's say you go to Facebook and you just started a job. They offer you your salary of $125,000, and then they offer restricted stock units. Basically, they're giving you stock in the company. It's restricted because you've got to stay there for a certain amount of time before it vests. Think about 401k when you go to work at a new place. They'll match 401k, but you're not vested in for 3 years.
Yeah, EXP Realty has it actually.
Oh, cool! All right, awesome. RSUs.
They phrase it differently, but it's the same idea.
Oh, okay, cool. That's really great. So basically, a lot of lenders, they shy away from using this kind of income because it can be unstable. It is based on the stock market. That's why we went to a conservative view of RSU income at the 36-month average. So, that's 3 years. So that's, a lot can happen in 3 years. And typically the stock market goes up. So anyway, so what happens is, you get your RSU grant. So, okay, Jody, you've started here at Google and you're getting 10 RSUs per year for the next 10 years that will vest January of 2022. 5 will vest, and then June of 2022 another 5 will vest, and that means that is your money. It is now it's being taxed, and it's in your Fidelity account. It's gone from the restricted section to the vested section. So what we do is we take the amount of awards that you're getting in the future even, and then we average the stock price, and we look at what you've gotten, and then we look at what you're going to get. What we look at when we see what you're going to get is to establish that the income is, sustainable and that you are going to receive it for at least 3 years. We look at what you have received and average only the 24-month. median stock price on that. So I don't expect you guys to really dig deep into that or understand or even know all the guidelines. Please don't even worry about all that kind of stuff. If you have a question, if you've got you're in front of a client and they ask you a question about it, just say, you know, Jody can help you with that, or text me the question. I can give you the answer real quick. That way, you know, you look like you know what you're talking about, because you do. But a lot of this stuff, you don't need to take up your brain cells for storage in there. All right. Any other questions about that before I move on?
That's good. Thanks.
Oh, okay. So what I'm going to talk about next here in the next few minutes is just the marketing pieces that I can help you guys with, that I can create. What I'm thinking about the mail outs is mailing some of these out. I think what I'm going to show you has great information. It is adding value to you and myself for these potential buyers. And it also helps them understand, you know, what is the market like in California? What's really going to happen? People talk about, oh, the bubble's going to burst. I don't believe there's a bubble that's going to burst in the housing market here. Nothing like what happened previously in the mortgage meltdown is happening now. What people are saying, in my opinion, when I hear or someone asks me, is the bubble going to burst here, is you're concerned because you've seen home prices go up drastically, especially in the Bay Area, so much in the last year because there's less inventory on the market. But that is the reason that prices have gone up. It's about supply and demand. It's not about unsustainable loans that have been given to people that really don't qualify. There are some subprime lenders out there, but you're not going to see that very much around here. I don't run into people, even when I'm doing pre-qualifications, that even need subprime, but I don't think any of that's going to happen here in California, or really even in the country. I think when the market cools off a little bit, because it's a little hot right now, it's a little hotter than we want it to be, unless you're a listing agent, right? If you're a listing agent, you're like, yes, turn up the heat. I think it's going to cool off here in the coming months, just kind of stabilize back down to the normal levels that we've seen here in the past few years. But still, appreciation is going to happen. And that's what we want to educate potential buyers that are renting right now. Okay, I've been paying, $3,500 a month in rent for 2 years, and I'm walking away from my apartment, and I have nothing, I have zero in my account from that move, versus I buy a house and I pay $3,500 a month in rent. I sell it in 2 years and I'm walking away with $75,000. Well, you've just lived for free, basically, for the past 2 years. You can kind of look at it that way. So helping people understand that and give financial literacy to people that maybe haven't ever thought about it or understand it or feel intimidated by it. That's kind of where my passion is, I think, going for the rest of this year, kind of where I want to take my business. So that's why I'm excited about these kind of opportunities. Real estate report card, it's kind of self-explanatory. You guys can look at it here on the screen. I'm going to email this out to you as well. It helps the buyer see the true value in, let's say, San Jose, California. Going to get the median home price. Now, this particular report card is New Jersey, so don't think that the median home price here is $386. The median home price basically is you take the high and the low, and then you just look at what's in the very middle. It's not an average or anything like that. So what you're going to, we can talk kind of more in detail about what that means if you'd like, but it does give the appreciation over a span of 5 years, 10 years. I can't see that. It looks like it says 60 years, but I don't know if that says 60, but it gives you the gain. So this particular area over 5 years, 120,000 gain. That's amazing. I mean, 5 years, even in your 401k would be hard to hit, with limits. $19,500 limit going into your 401k. So, position ourselves as also advisors for people's future, right? Your retirement, building wealth, things like that. Okay, this goes back to the same thing we just talked about, appreciation after 9 years. Talks about closing costs. Of course, that is a factor when we, there's a mortgage involved, there's title fees and things like that. Sometimes I can help with that with a lender credit. It just depends on where pricing is that day, borrower's credit score, that kind of thing. That will go into a factor, but it's usually, it's not even really a big deal. I don't get I've never had anyone say, I want to buy this house, but I'm not paying $5,000 in closing costs. So, don't worry about that. Cost of waiting. This would be particularly useful in marketing to people that are renting. It basically tells them, if I don't buy right now, this is what I could potentially not have in my account in 5 years. It's quite a big number, especially here. So this to me would be a great motivating factor for someone to say, wow, holy cow, like I can make this. It's not a guarantee, of course, but the trend is it's going to go up. I'm going to go to the seminar, see what these people have to say, see if this is real, I mean, if it were me and I was not in the industry and I saw this, I definitely want to, find out more about it. So you see the joint marketing co-branding there is, you'd be on the left, I'd be on the right, or vice versa. I think you're on the left. I'd be on the right. And then it's got all of our contact information. You can put your Twitter handle on there, Facebook page, website, all that kind of stuff. If you've got that going yet. Here's another cost of waiting sheet here that gives you a little bit more detail. Think about the effect of increased interest rate and how that impacts your buyers. We will talk about that in a home buying seminar, about the fact that right now, the jumbo rate is 2.75 with no points. If they wait, let's say cost of waiting 2 years and rates are at 3.5%, that lessens the buying power that they have. So now they're having to buy less house or put more money down to qualify. And it can with rates going up, it definitely will increase the cost of borrowing. Buying 400,000 versus renting, or here, buying 800,000 or buying $1.5 million versus renting. This is, of course, another great flyer that I think will help, draw more people to our seminar. Or, even if they don't go to the seminar, they would want to contact you and myself probably and say, hey, got this flyer, tell me more about this. I'm interested. So this is, again, more information. You're providing something of value. Bid over asking. I talked about this in my last call. And I'll just kind of briefly go through it. Bid over asking. So let's say you've got a borrower, you've put in an offer for $1 million, and the seller says, no, I want, 50,000, but you're concerned that it may not appraise. So what we would do then is you call me, you don't have access to this, and you're not allowed to have access to this. I don't know why, but it's just, unless you guys can find this calculator somewhere online, but you just call me and say, hey, give me this is the address. Can you do a bid over asking, even if your borrower is not using me for the loan, if they're with somebody else and they say, no, I don't want to talk with Jody, don't let that, don't hesitate. I'm still happy to give you this information. It literally takes me 1 minute at most to type in the address, get this over to you. I'll email it over to you. And then, you can use that to help them understand, am I losing 50,000 or what here? That's what people think, but here's how we can show them they're not. This will give me the address or the area, whatever. You can look at this current ask 1.2, bid over asking 50,000. When do we forecast that property is going to be worth 1.25? Well, right now it looks like in about 6 months. So that's great. You can tell the seller, all right, it's 50,000, but in 6 months, you should be able to recoup that in 6 months. Meanwhile, they're not going to sell in 6 months, right? They just want to be comfortable knowing that they're not, throwing money away, so to speak, or, they're losing anything, they're losing out. So this is an amazing tool. And then there's your 5-year forecast, $406,000 in appreciation. 6% average over 5 years. So then you say, all right, well, that $50,000 extra is helping you earn $400,000. I mean, that's kind of a no-brainer right there. So anybody that gives you any pushback or whatever on that kind of offer, let me know. I'll totally help if I can. Just a little chart there. If you have somebody that's a little bit more visual.
And if I can just, can I add one little thing to the
You sure can.
So one of the things I tell clients is, as soon as your escrow closes, right? So you've bid $50,000 over asking price over the appraisal. As soon as your escrow closes, that closing becomes the comparable for the neighborhood. And so it now raises the bar to the value when you closed, right? So you're not actually behind. You've established a new mark for that neighborhood for the value of properties. And then the next time a property sells, the appraiser is going to be using yours as one of the starting points to value the next one. So it's not like it immediately, your value can actually be right where you paid for it, right? You know.
Yep. Thank you, Mike. That makes a lot of sense.
Yeah.
Another part about if you're getting objections to a buyer bidding a little bit more than they want to, or they feel like they can afford, here's a couple of strategies that we can use here at Golden One. I mean, some of the strategy any lender can use, but especially the 80-10-10 is, our program there to help the cash flow. And I have someone right now that just went under contract last night, and we don't know yet. Right now, they're at 140 or so thousand above asking. We don't know what the appraisal is going to come in at. So what we've got now is they're putting 20% down, but they know that if it comes in a little low and they need to put some additional cash because there's no appraisal contingency, then we can come in and just say, all right, no worries, this is only 10% down now, and then we've got another 10% that we can work with for the additional that you need for the seller. So basically you're financing it, of course, but you're not really losing because it can be a tax deduction. It's considered purchase money, so it's great if you ever refinance in the future. That's always something that we can change the loan to at the time the appraisal comes in. We can always add this to it. It's not ever something that we have to do right at the beginning. We could also start with the 80-10-10, and then the borrower can say, I've decided that I'm going to put 20% down, and that's easy 2-minute fix for me, and move on. So here's an example here, just so you guys can kind of put the numbers with it. 1.2 purchase price, 1.25 contract price, putting 20% down. We do a first mortgage at 80%. And also, a little caveat there, when I give the approval letter and when the loan is actually ready to be locked, we price this 80-10-10 as if they were putting down 20%. So there is no adjustment to the rate on that first mortgage because it's actually 90% loan to value. And there's obviously no mortgage insurance because the first mortgage is at 80%. My letter will say that it's at 80%. I'm never going to divulge that to the seller. Otherwise, that's going to make them really nervous, right? 10% down. Ugh. So that becomes, for example, this one, 120,000 would open up for the buyer to be able to just put that over to the seller if they, offered over what the appraisal comes in at. We can increase the loan amount. So if it's under the jumbo category, conforming high balance is only 5%. So let's say they have, 10% down, and now they've got to pay an extra 25,000 to the seller. We can change that however we need to help them with the cash flow at just minimum 5% down. There's gonna be a little bit of mortgage insurance on there, but mortgage insurance is really cheap on conventional loans right now. As a matter of fact, the closing that we're having today, their mortgage insurance was $120 a month, and it literally dropped to $55 a month because the rates went down. Mortgage insurance rate went down. So that's amazing. So let's not let people worry too much about mortgage insurance, although people are always like, it's the devil's speak. Like, I'm not paying mortgage insurance, but what is $55 a month when it's helping you get into a home where you're going to have the appreciation in the future and things like that. On conventional loans, mortgage insurance does drop off. We don't require it to be paid a certain amount of time. All we need is a new appraisal. And if you've got the equity there, And remember, if you've bid over, that's now a comp. Now the other prices in the area, the comps are going to be a little higher. So chances are you are going to have that equity there, sooner than you think, sooner than 8 to 10 years, which is typically what the amortization schedule follows. All right. Let's see. Okay. Another quick little strategy here is premium pricing the loan. All that means is we will give a lender credit, and as you can see on this chart here, this is just a sample, not anything that's these rates aren't valid right now. So just an idea here. So for example, on $1 million loan amount, 3% today, or back then, would have given a credit to the borrower of $6,250. I know that may not sound like a lot, but if we're on a thin line here and they've got to, really stretch to put the money down to pay a little more than they wanted to for the property, if the appraisal comes in low, or if they just are short on cash but they still meet the down payment requirement and the reserve requirement, which is only 2 months, then $6,250 would just about cover all the closing costs, almost. So we can do that, and then you see here that that's only a $68 difference in the payment. So we would be giving them $6,250, and they would only be paying $68 more a month. If they needed more than that, then obviously we could go higher. So 3.25 would give them $12,500, probably more than they need. And just keep in mind too that none of this lender credits premium pricing can go towards the down payment, only can go towards the closing costs, but it can apply towards property taxes if they're escrowed, or home insurance. It can be applied to that too. I'll say this just at the end, and I'm not going to read this whole thing to you guys, but I do stress the importance of having your buyers become pre-approved before you go in, because as you all know, if you've written one offer this year, then you know that you can't have finance contingency in there. You really, good luck getting anything accepted with an appraisal contingency even, but the finance contingency, that's a big piece, and we don't want to ever say, for me even, yeah, I think you're fine, I think everything's good, don't worry about it, you don't need a contingency. I'm not going to say that. I'm going to say, let's put you in underwriting right now, okay, without a property, doesn't cost anything, no obligation. They don't have to stay with Golden One if they don't want to. If they have a contract and they want to go somewhere else, they can. But they will know that this loan has been underwritten, credit, income, and assets, fully underwritten by an actual underwriter, not just me as the loan officer. I actually run automated underwriting called DU, if you've ever heard that term, desktop underwriting. It's Fannie Mae's system that all lenders use to run underwriting, and you get an approval from that, but that's just based on the input information, the data. So if I say, well, this person makes, $125,000 a year, but their ratio is high, so I'm going to plug in $150,000 a year, I'm going to get an approval, and then that letter is going to go out. And then they're thinking that they're going to get this loan, but then what's going to happen is we're going to get the pay stubs and W-2s, and it's going to be $125,000. That income is going to go down. Ratios are going to go up, potentially making them not qualify. Now, keep in mind, I would never do that. I would never put more in there, but I have seen it done a lot of times, unfortunately, that it's just based on the information. Actually, you would be surprised that sometimes buyers don't even realize what they make. And I've had people that accidentally overstate their income, and then I've given them the letter because they don't want to provide W-2s or anything yet. And then it comes back, oh, this is not your income. So I stopped doing that. I stopped giving letters without viewing credit, income, and asset. So if you guys have people that you think might be on the fence, maybe they think their credit's a little bit shaky, I'm more than happy to take a full look at their profile, all of their documents, and let you know and let them know this is fine. Or we got a little challenge here and we need to address this, first. Especially if you've got any client that fits these three categories here, the conditional approval with underwriting, income, credit, and asset. If any of these apply to your clients, please let's get them into underwriting upfront. Okay, because that's stuff that I can still do, and I know what it is, and I calculate it myself and all that, but you still want to have an underwriter sign off, especially self-employed, with corporation, maybe multiple partners in the corporation, multiple K1s, that kind of thing. We want to make sure we have everything signed off on when you make that offer. Okay, I believe that is it. So we're at the Q&A section. If you want to open it up, Mike, or if you've got anything you want to share.
There's some cues already.
Okay, good.
That's probably not the best way to put it, but how about that? One was a general question about how the bid over asking price calculates it, not knowing the future. It's a prediction.
It's a prediction. Yeah, it is. It's based on the recent sold properties and basically what an appraiser would look at. Really, it's about 6% is the average appreciation rate here. So it's just based on that, but it is pulling data. It's not just like a magical number. It's pulling data, and of course, there's disclaimers that you can never, and I would never say you will. Your house will be worth this, or it will appreciate. We know it will, because that's the trend, and it has been the trend, especially in the Bay Area, for a very long time. Not likely, and don't let people say because Tesla's moving out, tech's leaving California. That's not happening. Okay, I've had people say that to me so many times here lately, and I would say steer clear of any kind of fear tactics there. So basically, it just pulls from that data, and it helps give the buyer the kind of like the projected value that they could be looking at in 5 years, give or take some, of course. No, it's better. To me, it's better than the stock market. I mean, you can still look at trends with the stock market, but recession, people are talking about, they're talking about recession coming up, inflation, things like that. That is completely out of our control, right? You and I can't do anything about that, but we can do something about real estate investing, owner occupied, second home, any of that.
And many of you may or may not know this, but built into RPR is a way to analyze any of the properties in RPR as an investment, where you can put in these criteria. A simple version of this is if you have a calculator and the people are buying the property for $800,000. So how much does the property appreciate every year? Well, maybe in the last couple of years, it's appreciated 15%. You might say historically, we used to say that it doubles in value every 10 years in California. That would be 10%. But how about 5, right? How about 5? The historical average for property appreciation in the United States is 4% a year, but California is higher, and so is Silicon Valley than California, but 5% a year. So if you have an $800,000 house and it goes up 5% in value in 1 year, that's $40,000 that it went up in value. Right, at 5%.
That's twice as much as you can put in your 401k.
And if you divide that $40,000 by 12 months, it means that your property is appreciating at $3,333 a month. That's how much. That's at a 5% return. So even if somebody pays a little bit, how long does it take to recoup your investment? Now, we can't predict the future. But I oftentimes, when I'm doing this, like in a presentation, use a calculator that compounds. You can easily find those on the internet, because if it goes up 5% a year, next year it's going up 5% of 840, right? And then the year after that, 5% of 880. And anyhow, there's calculators that'll calculate that, and then in 5 years it would show you how much equity you had built up. And by the way, in that example, it's like $245,000, right?
Yeah.
And my comment is, what is the chance in the next 5 years you're going to save $245,000? Maybe not, right? But if you buy the house in 5 years, you may have. And yeah, that's all. Other,
It's also, you know,
right.
people that haven't put much money into retirement. Let's say you're, you know, 48 years old and you don't have, you know, maybe you've only got 50,000, maybe you have zero in retirement. You want to catch up, then, you know, this kind of plan would help you do that. With no limits, you know, what you can put in there.
Sandra wants to know what the percentage rate of mortgage insurance is right now.
It depends on the loan to value. It depends on the credit score, property type. It can be anywhere from 12% to 35%. Conventional mortgage insurance is a lot lower than government mortgage insurance like FHA. So it depends. There are calculators online that you can go to and plug in what you think, you know, what you think that the credit score is. Maybe it's 680, maybe it's 10% down, condo, and it's going to give you the factor right there. And put the loan amount in and all that, it'll give you the actual number. But run it by me, because that doesn't necessarily mean that's exactly what it's going to be at all. So I go out to different mortgage insurance companies and get quotes when I need it. Genworth for us is the one we go to the most, the cheapest, the most reliable, and the quickest return, you know, response. Because they underwrite it as well. Not anything like how we underwrite, not that deep dive into it, but they do take a, you know, quick look at the file.
So there's a question about lender credits can go towards recurring and non-recurring closing costs. Asking if that's correct.
Yes.
Yes. And there's
it can go when I mentioned about taxes and insurance. So let's say that the loan estimate says the total closing costs are $15,000. That's going to include the loan costs, title, everything, even the escrows. So if the person is not put down 20%, they do have to escrow at least the property taxes. Then maybe they've got to pay 3 months of property taxes. That can be another $4,000 or $5,000. So if they don't have that, or they're really short on funds, then that's when we could look at a lender credit to, you know, for example, this one, $6,250. And that applies. It doesn't go into an actual box where it says, okay, this money is for taxes. It goes to the overall total cost to close.
And the final thing, people would like to have copies of all your slides, and they want us to paste a link so they could download them right now, but that's probably not going to happen. And if you're going to want to get a copy of these slides, you're going to need to reach out to Jody. And
well, I can also, I'm happy to send it out to you guys individually as
we'll
well.
be giving Jody a list of everybody who registered. And so she will follow up with you and provide links to the slides. How about that?
Yeah, I got a question for you, Jody. How much, do customers have to open up an account with Golden One to get a loan?
Actually, for credit unions, they do have to become a member, but I take care of all of that for them. All I need is their driver's license and mother's maiden name. We open the account and we deposit the dollar into the account that's required, and then that's it. They don't have to use it. We don't require them to use it or anything like that, but yes, any credit union does require you to be a member.
All right. Any other questions? If you've got somebody who's interested in buying a property and they have questions about loans, and even if they've already talked to a mortgage broker or to a bank, you ought to recommend that they get at least another opinion. Because I found that oftentimes credit unions have loans that are better loans than the ones that the mortgage companies or the banks. Some of you have heard me talking about one that Jody helped with where it was a better loan, a much better loan. And people could always use a second opinion. So reach out to Jody if you've got somebody and see if, you know, there's a better loan. You know.
Awesome.
I have a
Thank you so
really
much.
quick question, and that is, and I know I could Google it, Mike, but I just am lazy. Is there Golden Gate? Isn't there Golden One credit unions like locally? And are you in one of these branches?
There is well, depending on where you guys live, yes. Golden One is all over California. Headquarters is in Sacramento. There is a branch in San Jose downtown.
Yeah.
So the thing about Golden One that's different than the banks is they do have their own internal loan advisors. So there are loan advisors that do sit in the credit union, and any buyers that come in, any customers that come in, if they're looking for housing, mortgage or anything like that, they are referred to that internal loan officer. I'm considered external because I don't sit in a branch and I'm kind of all over the whole state. So, but I will tell you, if you guys are looking to, expand your business, you can go out and go to different banks and ask for their loan officer and say, hey, if you've got anybody that needs to buy a house, blah, blah, blah. There's no stopping you from doing that.
I think I've mentioned this before. What are 203K loans offered by Golden One?
No,
No.
not yet. They're working on that. We're working right now on 203K and VA loans. VA will probably get sooner than the 203K.
And depending on where you are in our market, and the person who asked the question is in a market where there's more FHA and VA than our market, because it's too expensive. All right. Well, thank you very much, Jody. I think we've reached the end of our appointed hour. Jody will be talking to you, emailing you with a link to the handouts, that sort of thing. Thanks for participating, everybody. And have a good day and stay safe out there, everyone.
Thank you all. Have a great day.
Have a great day. Bye.
Bye.